Doji star. Doji star looks like this. A doji star, in simple words, means confusion. If you see a doji star, that means confusion. A doji star consists of a red or a green candlestick. The first candle is a normal red or green candlestick, followed by a doji candle that opens gap above or below. Now what do I mean by that? If it is a red candle, the first candle, then the doji opens lower. That is pointing to a downward trend. If it is a bull trend, then it will be a green candle. After that green candle, the doji, the plus sign, comes like above. It opens with a gap above, pointing to a bull run. So basically it points to a continuation pattern. However, it is considered as a reversal signal. That is the red and doji star or the green candle and doji star. If the price immediately rises after this pattern, then you will know that it reverses. Example, in the red candle, it's falling right here as I have mentioned. In this fall, if a green candle follows it, then you will know that a reversal is coming. And same way, if it is a bullish pattern, then suddenly a red candle comes in, then you will know that fortunes are turning. Now I will show you the doji star on chart so that you can understand how it really looks like. Doji star bullish. Now what happens in a bullish stance is the first candle is a green candle. It opens at 24.68 and closed at 24.97. So it's a green candle. The next day it opens above at 25.01. Now here it has closed at 24.96. Now that's a kind of a doji candle because it's only a 5-cent difference. I believe if it is like in between 5 cents, then it's a kind of a doji. Because in doji, your closes on or near the open. And this 5 cents is near the open. So this is a doji candle. Now, what does it tell us? It tells us nothing. But it tells us that wait for the next day. And on the next day, it again, like it jumps up, but closes lower. So the next candle tells us, okay, there is something seriously wrong. It's not rising up. This doji should not have come to this place. This was the dangerous sign. But you have to interpret it. You have to understand what it's saying. So to understand it, you waited for the next day. And the next day, it opened lower, made a higher high, but closed again lower. So this was again like telling you, okay, the highs are not sticking. That's a bad omen. And that's exactly what happened. The price fell off. Another example, right here. It opens at 25.77, closes at 26.13. Good green candle. The next day, doji. It opens at 26.25 and closes at 26.21. Okay? Now it's telling us in a bull run, doji should not come in. It has come in. Okay? Be vigilant. Now what to do next? We will be waiting for the next day. What happens? It made a big red candle. Bad thing. And that's what happened. The market fell off for the next few days. Extremely bad. Let's see any other here. The third example. It's 23.24 open, 23.63 close. Good candle. Bullish candle. The next day it opens higher, 23.99, but closes at the same rate, 23.98. There is a sharp high, which again gives a bad signal. But it's a doji candle, and a doji candle in an uptrend is not a good move. Now once it does that, we will be waiting for the next day. Next day it makes a small red candle. Again the high is not exceeding the previous high. Bad omen. And it is telling us, okay, be vigilant. It will fall off, and that's exactly what happens for the next 2 days. That's the learning game. Thank you.